Hello, and welcome to Rocket Fuel, your daily update of everything that's happening in the Rocket Fuel community. My name is Wack. Today is May 9th, and in today's episode we're going to be talking about rewards night and some drama around that. We're also going to be talking about the launch of Puffer Finance, which is a liquid restaking protocol, and having their mainnet launch. And we'll also be talking about some political goings on in the USA and the consequences of that. So let's get started.
10, 9, ignition sequence start, 6.
Okay, so the first thing we're going to talk about here is the rewards night that just finished, the rewards period that just finished, and the rewards night that we had last night. Yesterday, right as I was recording, a few minutes later, the price had been updated for the RPL ETH ratio. This is to set 10% collateral. So as long as you are over 10% at that ratio, then you were all good. The ratio for that was 0.00692 RPL, and that is where the ratio was set. And I think there was some buying going on to get people above 10%. But as we got closer to the rewards period, Patches here said this interval will be spicy. Now I didn't know what Patches was talking about at the time. And I guess other people weren't sure either. But then a little while later, Joe came by and he wait, I'm missing one of the things here. So here's Joe a little while after Patches saying, "Sorry guys, I messed up. I've been so focused on the version 2, Smart Node version 2 beta and RPIP 53 that I just straight up forgot to do this. Not an excuse, more an explanation. I know I made a mistake. Ramana, forgive me." So what is Joe talking about here? Well, Joe is talking about this thing that Patches reminded him of a few days ago, saying, "Hey, did you ever add that 32 slot cap?" Now, I'm not sure exactly what that means, but I guess there was something happening with the slots, the way the tree was calculating the slots, and there was some cap that needed to be done. Anyway, Joe didn't do that. He forgot to do it. I guess he was just busy and it fell off his to-do list, and that didn't get done. Now, what was the consequence of that? Well, the consequence of that is that he says, as soon as I saw this, I was like, oh crap, edited for the invariable shaming on Rocket Fuel tomorrow. So there's no shaming, Joe. Like, things happen, it's all good. We get it. But basically, he saw this optimal inclusion distance spiking to 58, and knowing that something went wrong. And what ended up going wrong was that there were these reward snapshots submitted, and what ended up happening was all of the ones from the ODAO were agreeing with each other, except the one from the rocket scientists and from Ramana. All the other ODAO members had reward trees that agreed with each other, however they were all wrong. That here, look, Ramana says, "Welp, the Mercury route," and then there's a route. It says, "I agree with Ken, not the rest of the ODAO." So Ramana runs a tree every month just to make sure that everything is going okay, that everything's working smoothly. He's like an outside observer, and his tree and Ken's tree were actually with the correct configuration, but because Joe didn't update the trees for the tree generation for the rest of the ODAO members, they used an incorrect one. Now, because there's so many of them and they all agreed with each other, that's what became consensus, and that became what you got on rewards night. Patches wanted me to tell you that, look, this is the rocket scientists use the correct one. So yes, Patches, the rocket scientists did use the correct one. But anyway, what happened was the consequence of this, right? So Langer's put out a protocol post saying, "Hey everyone, the RPL reward checkpoint will be occurring very soon." This was just like 15 minutes before it occurred. It says, "This is just to let people know that we have noticed a small issue with the rewards calculation. TLDR rewards are safe, but the calculation doesn't align with the version 8 spec for this interval number 22. Impact on node operators is insignificant. around 0.0000001 ETH per mini pool opted into the smoothing pool. It says, but we're letting you know. And then the detail is the rewards checkpoint is done two ways: the regular way, the old way, and the rolling records, the fast new way. This is we updated both methods to version 8. And the rolling records was a small change that was missed. We usually test against another implementation to ensure correct spec accountability, but it wasn't possible for version 8. So what will happen? The ODAO have reported their settings, and they're mostly using rolling records. There's enough to come to consensus, so rewards will be checkpointed. We will apply the fix so that it adheres to version 8 going forward, and we will make sure that we do the spec compatibility testing against the other implementation going forward. Please let me know if you have any questions or concerns. So yeah, the impact of this was absolutely minuscule. Like Langas here says, it's like 0.000001 ETH per mini pool, which of course is like, you know, a couple of dollars across the whole protocol. But the fact is that there was a mistake. As minuscule as it is, it's still a mistake, and it's really cool that Joe, you know, held his hands up and said, "This was my bad. I'm the one who, you know, caused this to happen." And then for others to understand that was happening really quickly and trying to fix it going forwards. So, you know, it's not that big a deal in consequence, but the fact that it happened is a big deal. Like, thankfully, the consequences aren't too bad. Okay, next we've got this update from Maverick here. So he has his bi-weekly update. He says, "Hey everyone, the next community call is going to coming up soon. It's about 3 hours from when I'm recording it, which I think is at 7 p.m. Eastern time. Yeah, 7 p.m. Eastern time on Thursday the 9th. And Ken is hosting a guest from Numa to discuss the RETH DeFi opportunities. And there's a link to the events page. We'll chat about the latest bi-weekly update on the call too. Then there's a link to the bi-weekly update. It says, please make sure you head over to vote.rocketpool.net to vote on RPIP 52, which is about the rewards tree version 9 specification. And then there's a link to the thing. So let's have a look at the bi-weekly update first, and then we'll check out the vote. So here we have bi-weekly update, and Mav tells us here that our ETH supply is down 1.3%, and that is an annualized decline of 34%. We are down to 512,300. Active mini pools has declined 0.2%, which is down to 24,525. Node operator count increased by 0.4% to 3,695. With the smart node, we had two new versions of the smart node stack, 1.13.0 and 1.13.1. These were to make everything Houston ready. And then with the smart node version 2 beta, we had beta 1 and beta 2. And please remember with the betas that they are only for Haleshki testnet. They're not for mainnet because they need the Houston contracts to work. With R&D, we had audit reports about the Houston upgrade that came out. We also had a review of the upgrade code against the spec and resolving discrepancies. So this was the issue about RPIP 31, and again, more reward tree generation stuff. With the governance, there was feedback was sought about the implementation of reward tree spec version 10, latest GMC reports, PDAO reports, and IMC reports were available. And then feedback was sought about IMC nominations. If we actually have a look at IMC nominations really quickly, we can see that since I put my name forward a few days ago, we also have a Josh R, who has nominated himself also. When it comes to integrations, we have ShakeKit, Hyperdrive, Flat Money's RETH, and Flat Money's new product will be using RETH, and Open Dollar supports RETH as well. So those are a bunch of different integrations that are happening. And then with media and marketing, we have the latest RPL DeFi update is available. We have improved DEX liquidity on Base because Gauntlet has increased the supply and borrow caps for RETH on Moonwell. And then Jasper and Ken hosted a special guest to chat about DeFi in the Polygon ecosystem. And Mav was interviewed by a YouTube influencer. Now, I hadn't actually heard about Mav being on the YouTube influencers channel, so I'm really excited to listen to this. I haven't had a chance to listen to it yet, but this is by Digital Dunya, which I guess is an Indian channel, and here they're talking about rocket pools, and in the timestamps we see Nick's journey into Web3. That's Maverick. Working with Rocket Pool, how to join Web3, RPL token, RETH utility, what is RETH, running Rocket Pool nodes, and running a node on testnet. So there's a bunch of information there if you are interested in it. But yeah, you can see Mav wearing his little beanie hat, because I guess it's coming to winter down under now. So yeah, that's really cool. Okay, we talked about that. Okay, now let's talk about the latest RPIP 52 vote that is up for the community. And this is about rewards tree version 9 specification. And here we have, it says version 9 specifies and standardizes the rewards tree file. This supersedes the current specification for RPL inflation and smoothing pool rewards allocation. The proposal seeks to, and then it says standardize the expected format of the currently unspecified rewards tree file, switch it from JSON to SSZ, standardize the expected structure of the IPFS submission, and remove compression from IPFS submission. And then there's outcome like that. This will be the new rewards tree that will be adopted by the ODAO, and about the storage and stuff. There's some rationale there as well. You can read it if you want. But the vote so far, the way it stands is we've had 3,500 votes, and it is 98% in favor of this being approved, with 2% of the vote saying abstain and 0% of the vote against it. We are now over halfway to quorum, around halfway to quorum. So hopefully, we'll get enough votes in the coming days to get us to quorum. I voted in favor of this. Other people like Ramana, Dukey, Patches, Langers, and others all voted in favor of this also. I guess we're waiting for Joe and Val, who are big delegates. But other than that, like, there's a few other big delegates to vote as well, but it's looking like it'll pass. Okay, next, Bosi shared a bunch of screenshots yesterday afternoon in trading, and he tagged Jasper. And these screenshots show there being some huge deposits into the Rocket Pool's deposit pool to mint RETH. And there are a couple of screenshots here with, like, many hundreds of RETH being minted in each go. And then there was another one as well. So all in all, if we have a look at the deposit pool for yesterday, we'll see that the deposit pool is now almost back to being full again for the first time in a couple of months, it feels like. We have 17,733 ETH in there out of a maximum of 18,000. And if we have a look at yesterday, like I said, we had 3,542 ETH minted. And this is actually the best day for minting our ETH since January 15th, when we had 4,355. So that was actually like a really nice surprise, because, like I said, it's not been full for a couple of months now, but it's looking like we're getting back to being full. I'd really like to see it like empty one of these days with like a huge whale coming online and staking it all, but hey, hopefully that will happen soon. But this is definitely a nice step. Like, it's nice to see that people are still willing to deposit like thousands of ETH into Rocket Pool and minting RETH. Okay, next we have this story from Rocket Doc. And Rocket Doc says, who do I talk to about getting far less RPL than I was supposed to? And people, because it was rewards night, of course, so Rocket Doc was trying to go to, withdraw his rewards. And last month he had gotten 23 RPL, and this time it was down to 13.9 RPL. And he didn't stake any more RPL, he didn't withdraw any RPL, so he was wondering what was going on. Like, why was it the case that so much of his RPL reward has gone down? Well, it turns out that after discussing it back and forth with Halulu and others, it turns out that he had removed 3 out of his 5 validators, and because of that, the collateralization of his RPL changed, and it made like a lot of it ineffective, which meant that he wasn't getting rewards. So this discussion actually went on for a while they tried to figure it out. And Halulu said, look, by the way, you actually voted for this change in RPIP 30, and the incentives in RPIP 30 to add more ETH or you can just remove the RPL because it's ineffective. You can put it in something like Aave if you want or whatever like that. But the what actually happened was that you made yourself more inefficient. So eventually Hululu shared the new the charts for how much your APR is and how much your parts per million of node operator rewards you get. And I don't think he fully understood what was happening basically under the RPIP 30 changes. So he says, so I see the effect of dropping the sharp uptick from 5 mini pools to 2 with longer, flatter playouts. That's right. So he was kind of upset about that. He says, oh, well, still made more having that ETH in PancakeSwap pool. Submitted myself to Rocket Fuel. It took him like an hour and a half to figure out what was going on, but eventually he figured it out, and then he realized that the best thing to do would be to add more ETH to his validator. He says, yeah, I'm launching another mini pool, and then there was a new mini pool from Rocket Dock that was launched there. So it's a shame that he missed out on some rewards for staking, but it seems like he made some really good rewards for having liquidity providing on PancakeSwap. The rewards are pretty juicy there, so it seems like he did all right in the end. Okay, talking about some other staking protocols now, and we've got news from Puffer Finance. Puffer Finance put out this tweet saying Puffer mainnet is live. Visit us at puffer.fi. So let's usher in a new era of liquid restaking and keep Ethereum decentralized forever. So what is PufferFi? Puffer is kind of like a staking protocol, but they do native liquid restaking. That means if you are a node operator with Puffer, then your withdrawal address is set to an eigenpod, eigenlayer somehow. I think eigenpods. I forgot the exact terminology, but then you act as if you're a solo staker working with eigenlayer, and then you get LRT points, eigen points and all that kind of stuff, and you also get Puffer points as well. I think they're on season 4 now. I think at the moment the way it stands. Anyway, the Puffer has been accepting deposits for a while, but they haven't had a product to launch. So what were they doing? Well, what they were doing with their money was they were using it to buy Lido's ST-ETH and then depositing that into Eigenlayer to get points for their users and for themselves. And what they were going to do then is when mainnet launched, they were going to swap the LRT that they have. No, sorry, let me make this clear. When mainnet launched, they were going to swap the Lido tokens that they had ST-ETH or wrapped ST-ETH, and they were going to put that into the Puffer's Puff-ETH. I think that's what it's called. So here they're explaining what happens is that now we're vampire attacking over centralization of LSTs can threaten Ethereum decentralization, leading to risks like transaction censorship, manipulative MEV extraction, and influence on block timing. These actions threaten the network's integrity and decentralization. To combat this over the coming weeks, all ST-ETH deposits will be converted into ETH and fund a new wave of diverse validators. A decentralized future needs everyone, and this is really interesting here. They said node operators can run validators with just 2 ETH thanks to a secure signer technology and innovative validator tickets design. Validators ETH is natively restaked and delegated to power eigen AVSs. I'm really curious to see how that works, and I don't have the technical details, but I'm going to share that in the Rocket Pool Discord, and hopefully some of the mega brains will be able to explain how it works, because if they can get down to 2 ETH validators, like as a node operator bond, that's pretty cool, and I want Rocket Pool to do that too. Anyway, Puffer go on to say the real battle for Ethereum decentralization has just started. Catch the tide with Puffer's mainnet. Let's ride the waves of change together. Now, Hani Abu here had a tweet celebrating this, saying over the coming weeks, Puffer Finance will be redeeming the ST-ETH from their vampire attack. In total, 5% of ST-ETH supply will be converted back to ETH, and then it will be converted to Puffer Finance, or I guess their users can withdraw it. But that's 5% of Lido's ST-ETH amount will be going down, and that will have a huge impact on the overall amount of their market share. I think it'll go down by 1 percentage point if I'm correct. Maybe they'll go down to 27% dominance, which is really exciting. And here you can see the transactions where they've withdrawn 4,374 of their Puff ETH token to Lido withdrawal queue. So that will be getting withdrawn from Lido. So they'll be unstaking that. So that's actually really really cool, and I have to give them huge props for that. So yeah, that's pretty exciting. Okay, a couple of days ago, Rocket Fuel, we talked about a new Geth version, and Peter Silady was talking about how this is super efficient, and like, 1.14.1 was like a efficiency increase, and then 1.14.2 is another efficiency increase. Well, 1.14.2 is out now. The official line is this is a maintenance release containing bug fixes. In case you're wondering where 1.14.1 went, let's just say the continuous integration guards have not been good to us. So then there's a list of changes. There's Geth changes, RPC changes, tracing changes, and build changes. You can read the full information. But yeah, 1.14.2 is out now. So if you are a Geth user, which I said if you're watching this, you should not be a Geth user, but if you are a Geth user, update to get those benefits of super efficient client. Okay, next and final staking news, we have a latest episode of Infinite Jungle from Christine Kim. Christine, of course, hosts an Ethereum news podcast where she interviews different people, and she said that once a month I like to invite Nixo and Yorkick down to the Infinite Jungle pod to get a temperature check on the state of Ethereum staking. This month we chatted about the Hieroglyphs project and Max EB. So I haven't been able to listen to this yet, but if you are interested in what's happening with staking news as a higher level picture and the impact of Hieroglyphs and Max EB on staking, then definitely give this a listen and check it out. I have a lot of time for Nixo and Yorkick. I think they're both like wicked smart people. So, definitely give it a listen. Okay, moving on to Ethereum and crypto news now. This is a blog post that Vitalik released about multi-dimensional gas pricing. And he says, in Ethereum, resources were up until recently limited and priced using a single resource called gas. Gas as a measure of the amount of computational effort needed to process a given transaction or block. And then he gives an example of what gas looks like for performing transactions. Well, he says this approach has one major inefficiency. It treats different resources as being mutually convertible when the actual underlying limits of what the network can handle are not. One way to understand this issue is to look at this diagram, and there's a diagram of like computation and data and how it all looks together. And he says, there's different safety limits available, and by having a single kind of gas type, it brings in inefficiencies, which is why we can have multiple different types of gas. With EIP 4844, we've started on this. So EIP 44, of course, was the Denkun upgrade, which introduced blobs. So now you have the gas market and blob market. And Vitalik then explains what blobs are. But then in the paper, he goes on to explain different kinds of fee markets and how it's all going to work. So he says, multi-dimensional gas and stateless clients. He also explains multi-dimensional gas more generally. Transaction max, the weaker but easier way to get to multi-dimensional gas. And then he says multi-dimensional EIP 1559, the harder but ideal strategy. And then he goes on to explain multi-dimensional pricing, the EVM and subcalls, and that's that. So if you want to read the paper, the link is in the description below. Vitalik shares that information for you all to learn about. Okay, next we're going to get political for a couple of minutes. And this is about a tussle that's kind of going through in US politics right now about how to work with crypto. So here we have Tom Emmer saying the House just passed US Representative Mike Flood's bipartisan resolution to overturn Gary Gensler's illegal SAB 121 rule. I'm proud to be a co-sponsor of this effort. So what is this exactly? Here we have the article from Axios saying the House votes to overturn SEC guidance on crypto custody. So this is about a rule about how different companies can actually hold crypto. This is why it matters. SAB 121 has been something of a lightning rod, uniting crypto shops and major banks against the SEC. So what happened here is there was a guidance memo officially called Staff Accounting Bulletin SAB 121 that asks custodians of digital assets to account for them as a liability on their balance sheets. Critics argue that it would deter banks from scaling a crypto business by imposing onerous capital requirements. So it's a rule about how their balance crypto is added to the balance sheet of companies, making it really difficult for them to actually hold crypto. So this rule, by the SEC was harming crypto adoption. So this was voted against by Congress yesterday to overrule it. The big picture, the issue has become more salient for traditional Wall Street banks with the approval of 11 spot Bitcoin funds. A slew of bank industry groups wrote to SEC chair in February saying these ETPs have already experienced billions of dollars of inflows, but it's practically impossible for banks to serve as custodians for these ETPs at scale. The intrigue, of course, is they're wanting to overrule this and vote against it. And let's have a look at what happened then. So the vote went through Congress quite easily in the House, and that was because, of course, it's a Republican majority, but also 21 Democrats sided with the Republicans. So you had 207 Republicans all voted yes for repealing this, and 21 Democrats voted yes, with 182 voting no. So the total vote was 228 versus 182. So you think, oh, that's pretty good, right? Like, next is going to go to the Senate. If it passes there, then it should be good. Well, like, hold your horses. Even though people were quite happy with this passing, the fact that it has to get through the Senate is going to be more difficult because that's 50-50 Democrat and Republican. So it's going to be interesting to see how the lines get brought there. But Nate Garassi here shares this letter that came out of the executive branch, the office of the president, saying that if this law passes, House Joint Resolution 109, I think that's what it is, for the, would invalidating SAB 121. It says if this passes, then the President Biden will veto this, using the presidential power to veto it. And of course, as we see, the votes aren't there to overcome any kind of veto, right? Because you need a supermajority. So here Nate says crypto is the Wild West, it's completely unregulated. So this is a stance that people in TradFi or government tend to have. And then the response is, of course, okay, let's provide trusted, regulated financial institutions with the ability to custody crypto. And then it says politicians, and then they're vetoing it. So a lot of people are really angry about this, saying that the Democrats basically are completely against crypto. This is because of Elizabeth Warren, and she's leading this anti-crypto charge, and how it's terrible and horrible and everything bad in the world. And so yesterday crypto Twitter was really angry with the Democratic Party, saying that this is unfair on crypto, etc. And then at the same time, Donald Trump came out and said that he is now friendly with crypto. So there was a whole lot of political back and forth going on crypto Twitter. I'm not going to make my comments because I'm not making the show political in a sense, but I guess you can see my Twitter timeline to see what I feel about it. Okay, moving on to some other political, but this time slightly different news. So this is an explanation of what happened yesterday with Grayscale and them pulling back one of their ETFs. So since yesterday, a lot of information has kind of come clear, and people have kind of theorized about what actually happened yesterday and why things happened the way they did. So for those of you who didn't watch yesterday, Grayscale had another futures Ethereum ETF application that was under process. So the first one that they did was under a specific act. I think it was the 1933 Act. And the second one was under the 1940 Act. Well, it seems like the Bitcoin ETF that was approved in the court case, to be transferred into a spot ETF, the futures ETF, was under the 1940 Act. I might be mixing those up. I'm sorry about that. But the idea was that this was a Trojan horse application. The Grayscale would file this one to be the same as the Bitcoin one, the one that they won the court case with. And then that would mean that if their spot ETF conversion was declined, then they would have this ace in their pocket that would let them, start a lawsuit against the SEC. And by having the exact same circumstances of the exact same product, they would be able to make the exact same argument at court and hope that the argument won out. So yesterday, people from Grayscale started talking about how, they're really optimistic the SEC will do the right thing in terms of approving a spot ETF, and how they Grayscale is already doing all what they need to do, and how they're ready for the SEC now to do the right thing. So here, Nate says, the Grayscale CEO says on the spot that he's optimistic the SEC will do the right thing by investors. However, so people got quite happy about this. They're thinking that maybe it means that they know that, you know, a spot Ethereum ETF is going to be approved. So here Leo said, you know, the CEO of Grayscale said that he's optimistic that the SEC will approve the firm's application to convert its Ethereum trust to a spot ETF. So the idea here being that they don't need to carry on with that futures application because it's kind of pointless anyway. And what's going to happen is the SEC is going to accept their spot ETF. So it's kind of moot. However, the Bloomberg boys didn't have that perspective, and Eric here says, I disagree with this. We are as pessimistic as ever. I mean, at some point it could happen, but not within the next year, in my opinion. What they say in denial and the November election are going to be big variables that could fine-tune the outlook though. By the way, he also said they withdrew the 1933 Act Ether Futures ETF because they wanted to focus on spot. Well, the only reason to file that under the 33 Act versus the 40 Act was to provide opening for a lawsuit. Withdrawal is shutting the door for anyone to sue, basically. As I predicted, they're probably not interested in footing the bill again, just to give BlackRock a monster hit ETF, and while taking a bunch of crap from people on here because of unlock outflows. Can you blame them? So what Eric is saying here is basically that the reason why they withdrew this is because they don't want to convert, they don't want to foot the bill of legal cost going against the SEC and like bringing it to court because it's expensive. And also the consequence of that will be that others will gain and then they themselves will lose by so much ETH leaving their product, and then people actually being angry at them for so much ETH leaving their product and being sold on the market potentially. So it's really interesting about the dynamics at play here. Jason here as well had, Rodeo says, the bad reading of this is that Grayscale won't fight for the conversion of ETH. Why doesn't really matter, but it could be something as simple as keeping the fee generating business of ETH. This would be disappointing. So the idea here is that they are happy with their ETH fees that they're earning and they want to keep earning those fees. So what they'll do is keep it as the status quo for as long as possible. And if someone else wants to do the work for getting a spot ETF, then for Ethereum, then great. And if not, then they don't care because they've got a product and they're earning fees on it. That's a really pessimistic way of looking at it. However, Scott Johnson here shares that. So he puts this quote out, fake quote saying, sarcastic quote saying, at Grayscale, we decided to focus our energy on not letting the ETH outflows to occur following a conversion. Obviously, that requires doing things to slow everyone else from pushing forward a spot ETH ETF, even if we have to rug ETH holders enjoy the discount. Other issuers, other businesses facing enforcement actions related to ETH, and every person that holds ETH. There is no alignment here. We prefer the SEC to continue its reign of ambiguity and terror. So Scott says, pains me to say because I think they didn't get enough praise for GBTC, but you're going to get the good and the bad from me, and this is rotten. So basically what he's saying is that they are doing this deliberately. They're being selfish. They're only caring about themselves, even though they had put themselves in a position to be the ones that would champion the ETH spot ETF. Now they're kind of like taking their ball home and not letting anyone else play as well, because it resets the clock for any other providers. So, if the SEC reject, in 2 weeks' time, which is what the vast majority of people expect to happen now, then this, all this process will have to start. And, the SEC could potentially argue that it's, the Act 33 versus the Act 40 issue. And because they have pulled their application back, it's going to reset the timeline basically for all that. So they're just being shits basically. So people are not happy with Grayscale, and they haven't actually come out and explained why they've done this. Just some vague idea of we're optimistic about the spot ETH ETF being approved, which seems like wishful thinking. So yeah, people are not happy about that at all. Okay, and we're going to finish today's episode with some more SEC drama. So this was from Exodus Wallet, who were on the verge of listing on the New York Stock Exchange. And they said, today the SEC made a surprise last-minute decision that delays Exodus from listing on the New York Stock Exchange in America. While we are deeply disappointed, Exodus will continue to empower customers all over the world to control their own wealth using our best-in-class self-custody crypto wallet. We're hopeful the SEC will act in good faith and Exodus will be welcomed to the New York Stock Exchange in a timely manner. Crypto's potential is undeniable, and Exodus has proven since 2015 the ability to secure both digital assets and users' financial future. One thing will never change: we will continue to innovate and build value for our customers and shareholders onwards. So this again, like, is a product that was on the verge of being listed on the stock market, and at the last minute, the SEC has delayed the listing. It seems like, in these last few weeks, the SEC is going guns blazing, trying to restrict everything crypto related. They came for Uniswap, they came for Consensus, they came for Coinbase, Kraken, and Robinhood, Exodus. All of these, the ETFs are going to be denied, and all of these things one on top of each other just shows that this SEC doesn't care about actually going out and providing good guidance, because that's not what they're doing. They're just trying to scare anyone dealing with crypto in the market and forcing them to go to lawsuits to get clarity. This is not sustainable. And by the time these cases come through, it might be a year, 2 years down the line, and it's just users are the ones who are going to stay in limbo, and even our TradFi institutions are going to be the ones that stay in limbo until we get this clarity on what we can and can't do. And it's absolute garbage from the SEC. So seriously, Gary Gensler is just Gary Gensler is horrible. The political system's corrupt as hell, and Ethereum is a huge risk to traditional markets, right? As much as they're trying to co-opt it in ways they can, the reality is that it provides an alternative to the financial system of the world, and that is existential crisis to the established order. And this might sound tinfoil hatty, but it's the only thing that makes sense. And we are definitely firmly in the then they fight you phase. And the next is, that we win. Sadly, it might just be a couple of years before we win. So until then, you'll be seeing me every day. So thank you all for watching, listening, and being part of the Rocket Fuel community. I hope you all have a lovely day. Try not let this get you down too much. Hopefully the bull market will resume soon and we'll all feel better for it. But I'll see you tomorrow regardless. Bye.